Becoming a Forex trader in 2023 isn't an easy road, but it's definitely one which you guys can complete. You've probably been sold the lifestyle on Instagram, YouTube, Twitter, people living the Lamborghini lifestyle, trading from their laptop on a nice sunny beach, but that is far from the reality of what it's actually like to be a fully consistent Forex trader. Today I'm going to talk about a few points in what it's actually like to be a trader, some struggles which I actually had when I was becoming a trader that trades as my sole income, and some ways around mistakes I personally made, and also some of the positives too along the way. Same with every job, there's going to be positives, there's going to be negatives, but overall, if trading is something that you enjoy learning, you enjoy the process of marking up the charts, losing lots of money, and hopefully in the long run making lots of money, then it's definitely something that you should stick with and put your time and effort into, and also put your money into, because trading can be very expensive at times. So we're going to start off this video talking about the monetary side of trading and where people go wrong when they're starting. You know, I was the same when I started. I wanted to get rich quick. Trading simply isn't a get rich quick scheme. You probably hear traders talk about this a lot, that you can't get rich quick in trading. But I feel like once you have cracked your strategy, you kind of know how the markets work, kind of have a strategy which is consistently profitable, then you can get rich quick. If you've been trading for a year, 2 years, and then you put the time in, back tested your strategy, you forward tested, maybe traded a demo or a small live account, then you have enough data to prove that you're profitable. If you use your money to then buy a prop firm, you get one payout, can technically get rich quick within, you know, a matter of weeks with a prop firm. But obviously you do have the time before where you are learning, putting the time in, putting the hours in, which people don't see is part of the get rich quick process. You know, before you actually get into trading, and let's say you're a complete beginner, you're going to want to learn the basics. If you don't know what a pip is, if you don't know market phases, if you don't know about how the markets actually move and why they move, then you need to do research on these topics before you actually start trading. Very, very basics you can learn from websites like babypips.com, free content, and a lot of traders now actually sell courses from baby pips. So very, very good info, especially for beginners, but obviously I wouldn't build a full strategy from that, as it is very, very basic information, but it can definitely help you if you are just starting out. And after you found out the basics, around this sort of time, within the first few months of trading, the majority of people actually fail. The majority of people lose their money and end up quitting Forex. This is a lot of the times the people that call trading a scam. They put their money in, and you guys know the stats. Within 90 days, 90% of traders lose 90% of their money. This is obviously traders that give up within 90 days. The majority of people that actually spend hours and hours and hours every single day for months, if not years, putting in the time, they're not part of that 90% because they haven't given up after 90 days. You know, at the start, the first few months is where you're going to encounter the biggest challenges, the most setbacks, which if you overcome them, will then lead you onto a nice path, hopefully to the upside in your Forex journey, to eventually making a lot of profit. But if you actually let these losses bring you down and you kind of judge your trading off these beginners' losses, then it can be quite dangerous, because you will doubt yourself. Why would you expect yourself to make loads of money anyway? You're a beginner. So many people compare themselves to my journey, to another trader's journey who has been trading for 5+ years, 10+ years, when they've only been trading for 5 months. How is that any equal comparison? That's like me comparing myself to Messi if I played football for a year and wasn't at his current level. It just doesn't really make sense to compare yourself. So why would you compare yourself in trading? If you don't have a Lamborghini when someone else has a Lamborghini, that doesn't matter. They're on a different path, they're on a different journey. They might not have had the same journey as you have. A lot of times, no one has the same journey. Majority of times, everyone's going to have different journeys, different setbacks. People are going to find certain parts of trading easier, and this is just literally part of the process. If you don't compare yourself, you will be a step ahead of a lot of other traders that just try to copy and replicate other people's results without actually putting in the hard work themselves. Everyone sees the markets differently. When I started trading, I didn't really think like this. I thought that if I found out the holy grail of trading from one trader on YouTube, you know, I was sat there Googling iPhone trading strategy, how to trade Forex, free Forex tips, and all this sort of stuff. And I was basically looking for the holy grail. And the holy grail simply doesn't exist in trading. People claim to have the holy grail of the Forex markets, but there simply isn't one to actually find. You will literally be looking forever. The best way to actually go about this is to pick one strategy and stick with that one strategy. Anything can be profitable. A lot of people, you know, bash indicators, support and resistance, but these work. They wouldn't be around if they didn't work. It's as simple as that. Support and resistance is probably the most widely known Forex strategy in the world, and that's because it works. People say, oh, it just gets manipulated by the banks and everything, but why would people trade it? I know consistently profitable traders which solely trade support and resistance. I was profitable trading solely support and resistance. I adapted it obviously because I wanted to change my trading style to go with the larger capital sizes, and I wanted to lower my risk, and this is fine. You're going to adapt your strategy along the way, but you aren't going to see the markets the same as someone else. So don't go looking for a holy grail that someone else claims to have, when you can just use your own strategy, build up and create your own holy grail in the markets. So once you've accepted that you are going to probably lose at the start and you're going to have to overcome these setbacks, be prepared to lose lose everything that's in your account. So many people go into the markets their first few months, their first year with their life savings. They have £1,000 total in their savings. They put £1,000 in, or maybe they even start at 500, blow it, put another 500 in to try and make their 500, the original 500 back. Recipe for disaster. As simple as that. At the start, you want to put in as little as possible. The best thing to probably do is to start with a demo account. The main benefit of using a demo account is you're getting used to trading the markets. You're getting used to actively entering on MetaTrader 4 or whichever platform you choose to trade on, and you're getting used to the interface. You're familiarizing yourself with calculating risk, setting up your risk to reward, journaling your trade. And this is something I wish I did for a little bit longer, was trading on demos. You know, I was trading on demos for probably around 3 to 4 months, but I wasn't really fully profitable. And after doing this, I went straight to a live account, made a profit for the first week, beginner's luck, and then just blew it. Deposited, blew it. Deposited, blew it. It's a very vicious cycle where anything I deposit, I just lose. I ended up selling my Xbox. You know, back in the day, I was like 16, so that was like one of the most expensive things I had. Sold my Xbox, sold all my clothes. You know, I used to do clothes reselling to try and make money. So I sold all the clothes I had to try and fund my Forex accounts. Anything I used to make from that, I used to put back into the Forex accounts and just blow it. It's as simple as that. And if you do this, it can weigh you down mentally and your bank account. Both of them will not be looking very healthy if you actually continue doing this for the long run. If I had a part-time job or a full-time job at this time that would have supported my trading, it would have been a lot easier. I would have had less pressure on actually making profits, because if you're not making consistent profits, then why are you even doing it? You're just going to go down, down, down. Whereas if you have other income that will cover any of the trading losses and mean that you're still making profit each month, then that's all good. It'll relieve a lot of pressure from your trading to make profit every single time you enter a trade. It was a lot easier for myself personally because I was only 16 years old, 16 turning 17, and I didn't have expenses. I didn't have a family. I didn't have a house. I didn't have any of this stuff to actually look after. So I didn't have any expenses. It's as simple as that. I probably had to pay like my phone or Spotify or Netflix subscription. That was about it back then. So obviously, the more responsibilities you have, the harder it will be to become a full-time trader. You're going to have 6 to 12 months of savings. So that gives you 6 to 12 months of no income or no extra income from your trading to actually pay all your expenses, your rent, your bills, your food, your family, everything like this. If you have pressure in your trading, you will make mistakes. Simple as that. And don't invest all your money into your account. Let's say you sign up to a broker, and even to this day, I'll never put all of my money into a Forex account. I won't even put 50% of my net worth into a Forex account. If the money is in the account, you have to be willing to lose 100% of that. Let's say you're in a trade and you forget to put stop loss. Your internet goes out, something happens and you can't access your account. Your phone breaks, your laptop breaks, you can't get into the account. You could lose it all. Would you want your life savings in that account? Answer is no. If you ask yes, go to the casino and put it all on red. Make sure all the money in your Forex account is money you're willing to lose, money that you've accepted. If it goes to zero, your lifestyle isn't going to change for the worse. So moving on to the next point, and this is information overload. I struggled with this, and I know a lot of people do currently in their journey. Get messages on Instagram, comments on YouTube. People in my Discord were struggling with this when they came into my mentorship group. There's so much information out there now. If you Google how to trade Forex, or even just Forex trading on YouTube, Google, Instagram, Twitter, there's gonna be thousands of results of people showing you how they trade, showing you how not to trade, tips, tricks, everything like this. Which videos, which creators do you trust? It's very, very tricky. There's going to be people out there which have, solid, good information, like myself, I'd like to say. And there's going to be people which are just out there to grab your money and go. They don't care if you make money or not. They just want your money. Or even they're just doing it for a bit of fun, but they don't actually have any good value to give you. You're going to see their strategy. You're going to try it out. It doesn't work too good. You're going to click on another video, see their strategy. And the more strategies you've actually seen, the more different confluences which you try to learn, the harder it's going to be when you actually sit down at the charts to trade. Let's say I've learned a strategy from 5 different traders on YouTube, Twitter, Instagram, and now I'm looking at the charts. What do I see? I see bits from each one of those traders, bits from each one of those strategies which I've actually tried to learn. Whereas if you just stick with one single strategy and try and learn that, develop it to kind of fit your trading style and completely understand it before you then try another one, because maybe that one isn't for you, you're going to want to just stick to the one. The more you actually have, the harder it's going to be to develop a trading plan as well. I often say to people that are losing traders, show me your trading plan, show me your trading journal, show me your backtesting results. 9 times out of 10, these traders which are losing traders that have tried to build a strategy, they don't have a plan. They don't have any backtesting results. They don't even have a trading journal. So how do they know they're not profitable? They just have their MT4 screenshot, but that doesn't really show anything. They have no reasoning behind their trades. They don't even have criteria to enter a trade. So why would they expect Forex be profitable. If you don't have back-tested results, you haven't tested your strategy thoroughly to actually understand when to enter, when to close, when to hold your position, whether it's in drawdown or in profit. These are things you need to understand before you even say that your strategy does or does not work. Simple as that. I made this mistake when I was starting. I just wanted to learn everything. I'd watch one YouTube video about a phone strategy. I'd watch another one about an indicator strategy. On my chart, it was very, very messy. I had all these different boxes drawn, fibs, indicators, everything on a chart. And it was just very, very cluttered. And obviously, the more that's on your chart, the less you're going to understand what's going on. You want to keep your charts nice and clean. This is what I do now. At the start of every day, I kind of clean my charts. Little button you can press and it cleans everything from your charts. There's no indicators, there's no drawings, everything is clear. You want this clean chart so you can have a clean, fresh mind to start the trading session. Same with your desk. You want your workspace to be very, very clean. The same as your desktop on your computer. You want it to be clean. You want it all to be nicely in line and in order. So then your mind is clean and your mind is clear, ready to trade properly. And once you have found a singular strategy which you're going to focus on, this is when you can put in hours in the back testing, forward testing, demo testing, live testing to then fully understand that single strategy, rather than strategy hopping to try and find the best new strategy which someone came out with last week. Moving on to the last point, this is actually spending Forex profits too soon in your journey. I know it's very, very tempting. If you start making good profit, let's say you're making your first 10K in a month, you know, it's 120K a year. That's very, very nice. Obviously, you have to pay tax as well. So you have to take that into account. You then have to have all your expenses, take this into account also before you then say you've made a certain amount of profit, because you haven't actually made it yet. But it's very, very tempting to actually spend this profit. You might have this car that you've always wanted. Now you've got the money, you go out and try and buy these things. A new watch, a new car. You know, I waited 2 years before I actually bought my first Rolex. Very, very nice watch, but I did actually wait. And I see traders that get a 30K payout or even a 20K payout, then they go and buy a 10K watch or they go and buy a 10K car. Very, very stupid. Would you really want to spend half of your net worth from one payout, from one singular payout on one item? Absolutely not. Very, very stupid thing to do. In this industry, money is never guaranteed. Profit is never guaranteed, especially if you are trading a funded account. But this also goes for funded and personal people. You're going to want to focus on the long-term growth. You're going to want to future-proof your whole lifestyle. You're going to want to take money out of the Forex accounts, the profits which you've actually made, and invest this. You want to have a set percentage. So let's say 50, 60, 70% of all your profits, you know, after tax, after VAT, let's say, and all your expenses, then you can invest into whatever you want to invest into. Index funds, stocks, real estate, anything really. You can put your money into these, and with the 40% left, you can then spend it on whatever you want. Or even if it's 20% left, you're making a decent amount of money, you can live off, 20% of your income. And if you invest 80%, you can retire very, very soon. And obviously that is always the goal, to make it so you never have to work again from your trading or have no stress on your trading, because you know your investments are returning a certain amount and you don't have to make 5% every single month to trade to actually be able to pay your expenses. If you focus on the long term, it will compound up just like your Forex account, which everyone talks about. They always talk about compounding their Forex account to £10 billion in a week. They don't talk about compounding all their other investments, which will actually help improve their Forex trading in the long term anyway. This is what you need to focus on. So focus on compounding your account, focus on sticking to one strategy, focus on looking at the bigger picture in your trading and not focusing on the losses at the start, because that is inevitable. If you're going into uni, you're going to have that big upfront cost, 60, 70, 80, $100,000 actually in debt at the start. And then you go and start earning 30 grand a year. Just think of this as you're trading. You're never going to lose as much as 100 grand in 4 years as you would at uni. So just think of it as investment at the start to actually learn and to grow in your Forex career.